It's not a pending crisis, it's an actual crisis right now with debt. And again, it's throwing numbers out, but then putting them into some kind of context. I mean, when I look at debt, when I was born in the 70s, U.S. government debt was $240 billion. You fast forward to where I am today in my 50s, and U.S. debt is really basically 35.7. I mean, that's an appalling number. And I've said many times, it's like Hannah Arendt on the Holocaust, the banality of evil. You can't make sense of the millions killed during the Holocaust or during World War II in general. It just becomes abstract. When you go from 240 billion to 35.7 trillion in part of my lifetime, those trillions become a banality of data, a banality of debt. They become hard to really functionally understand or get your arms around, but you can't go to 246 billion to 36 trillion without consequences to the currency. And you can't have a balance sheet with 210 trillion in liabilities, 190 in assets. That's a banana republic balance sheet. You can't have twin deficits of 3 trillion or more. I mean, David Hume wrote about this in the 1750s. Reinhardt and Rogart write about this in our lifetimes. And von Mises, the Austrian school, these are not just quacks. This is basic common sense math and history. So you are going to have a major problem with that debt on your economy. You're going to have a major problem with corporations refinance. You're going to have a major problem with having growth. David Hume said, when you cross the debt GDP Rubicon of 100%, you lose growth by a third. As I've said many times, that's like trying to swim across the English Channel, but well-trained with a cannonball tied to your ankle. Even the best swimmers are struggling against these debt realities. It's not academic. It's not optimizable. You have to be pragmatic. You have to either hyperinflate like Germany did, or you have to go to like during the Weimar period, you have to use the UK example between the wars where you shrink yourself. When the UK shrank itself, that was post-World War I, actually. That was 20 years of depression. And they had problems with communists and fascists fighting in the streets, just like in Weimar, communists and fascists fighting in the streets, because it's expensive to hyperinflate and it's expensive to shrink yourself, but you have to have some version of perversion when you've perverted your debt levels this much, and that always affects the man on the street. It always does. And sadly, when you go from a debt cycle that's this over its skis empirically, that always leads to a market crisis, to a currency crisis, to an inflation crisis, which is then a social crisis, which is then followed historically without exception by centralized control from the extreme left or the extreme right. It's always been the case. And that's what we're seeing in the headlines more and more, is this centralization, whether it's CBDC or whether it's lawfare and warfare, or whether it's the weaponization of our currency, the weaponization of our justice system, weaponization of the First Amendment to our Constitution. These are the reasons people are angry, distrustful, broke, scared, and that doesn't mean to be gloom and doom. Just saw it again in multiple countries, in multiple language, in multiple states. So I don't think I'm data mining. I think I'm really seeing it as it is. Again, we can talk about markets too, but the economy has been driven. It's so correlated to the markets. I mean, just last year, the bulls were hoping at the beginning of the year that we'd see 4,800 on the S&P. We're now approaching, 6,000, and it's even more bullish than they could have imagined. And yes, that can drive spending. But I still believe in Bob Farrell, and I believe in Charlie McKay. This is a mad crowd in an S&P that's got 20% of its market cap led by a handful of names. Same thing with the NASDAQ, and we can go into the risks there. But that madness of crowds and that exuberance is nothing new. I've seen this movie before in 2000 and in 2008. I was trading in those days. I'm not trying to be grumpy for grumpy's sakes, but those veterans still resonate with me. The veterans who've been through that, I'm one of them now. This is nothing new. And so you are going to have a consequence for these sins, and you're going to have mean reversion, and you're going to see when that S&P and that 401k is no longer ripping, you're going to have an economic crisis unless you decide to stimulate the markets, nationalize them effectively with synthetic mouse click money, and then keep the markets going as a national 401k. But you're going to do that at the expense of the dollar you measure your wealth by. So you're running uphill in roller skates, or you're swimming in a circle. You're not actually progressing. People feel that. The de-dollarization theme, from the moment we weaponized the US dollar, Grant Williams, myself, Jim Rickards, a bunch of us were kind of predicted or criticized for being too negative on what the implications of that were because of the patriotic fervor about Ukraine. You have to step outside of the Ukraine debate, which I'm not going to get into, right or wrong, but weaponizing the world reserve currency is something John Maynard Keynes warned against. Barack Obama warned against that in 2015 during the Syrian period. And even Robert Griffin, when he came to our Congress, said, whatever you do, don't weaponize the world reserve currency, because when you do that, other countries lose trust. And I warned that that was as big a shift in 2022 as going up the gold reserve was in September of 1971. And what we're seeing right now in de-dollarization, you have to look at this from the BRICS perspective, from the East perspective, and what the BIS is doing, what the petrodollar is doing. These are all reactions to the U.S. going one step too far and bullying the world with its world reserve currency and its status. It's been exporting inflation for generations, but this time they jumped the shark, so to speak. And I think, the BIS just made physical gold a tier 1 asset next to the U.S. Treasury, that risk-free return, which I think is return-free risk measured against actual inflation. That's a critical moment when the BIS says that the next best way to store value is with physical gold. That was off the headlines. No one talks about that. Seismic shift. You've got Eastern central banks net dumping U.S. Treasuries and buying physical gold at record levels since 2014. No one discusses that. You've got 30 countries repatriating their gold outside of the New York and London exchanges because they want it within their own zip codes, because they don't want it levered with paper contracts and distorted anymore on these exchanges. They want it at home because gold is so much more important now as a tactical and strategic reserve store of value to save with, rather than a U.S. Treasury or U.S. dollar. You've got the COMEX and the LBMA markets exchanges seeing outflows, massive outflows. So they can't lever, even with Basel III regulations, they can't lever the gold price down artificially like they used to just 3 years ago. Unthinkable. So you've also got 45 BRICS nations now openly trading outside of the U.S. dollar. You've got a gold exchange in Shanghai. It's going to reprice fairly gold in a different way than it does in New York and London. So that means that London and New York can't have a 200-day moving average in gold that's different than the one in Shanghai. They can't explain that because now Shanghai is going to do it more fairly. We used to be worried about the Moscow World Standard when I was talking to Michelle a couple years back, but it's actually Shanghai. And then you've got the IMF talking about central bank digital currency during the COVID crisis, signaling the inevitable CBDC. But even that has to be pegged to gold to have value. You have massive changes in the petrodollar, which now in just the last few weeks have seen huge changes. And then, of course, you have this Enbridge new thing that could possibly be operational. This is not a conspiracy theory, but all of these things signal that the rest of the world, in particular the East, I mean, Poland has more gold now than the UK. Since Gordon Brown sold UK's gold, they have lost 90% of the purchasing power of their currency compared to gold. It was appalling. The countries in the East are playing chess, while the countries in the West are really playing checkers. And so all of these things that I just talked about are open and obvious indicators of a world moving away from Western fiat money in general, in the US dollar and US Treasury in particular, and going to gold. I'm not saying that as a gold bug. Look at the data, look at the moves. I say it's the Wayne Gretzky analogy. Always play where the puck is going, not where the puck currently sits. And every central bank in the East, in particular among the BRICS countries, is chasing the puck in the direction it's going. Whereas the West is staring at the ground, looking where the puck was. And I don't think that you can underestimate enough the significance of that. And in particular, what's happening even in things like the dollar, in the petrodollar, that is a huge source of straw sucking, as you would say, milkshake theory, source of demand for the US dollar. But Saudi Arabia just became a member of this Enbridge idea that Glassiev, who's a massive important figure in Russia and is an advisor to Putin and also to this Eurasian Economic Union, met with the head of the BRICS New Development Bank in Russia. Last year was in South Africa. This year the BRICS met in Russia. And they've created a new unit of account for decentralized cross-payment settlements outside of the US dollar, which is backed 40% by gold and 60% by local BRIC currencies. And we're talking about countries like Hong Kong, Thailand, China, BIS supported, and Saudi Arabia and the United Arab Emirates. Now think about the second derivative thinking behind this. Saudi Arabia and the UAE are major oil parties. And they are now signing on operationally to something that could happen, I don't know when, but the clear puck is heading this direction away from the dollar. When you can start net settling oil sales, and they're already doing it anyway between Russia and China, they're net settling all those trades from yuan into gold outside of the US dollar. China is a major oil importer. Russia is a major gold exporter. After we weaponize the dollar, they're in bed together now. That was inevitable. But now, more importantly, our former petrodollar partner, Saudi Arabia, would rather go to Russia than Italy to meet with the G7 because they see the direction of the hockey puck. This is not an exaggeration. It's not talked about in the political debates in Europe or the US. It's not talked about at the New York Times as well as it should be. It's not talked about on your Bloomberg screen as much as it should be. It's not gloom and doom. This is an army moving away from the border. This is a movement away from the US dollar. And what does that mean? If there's less love for the US dollar, if there's less love for the US Treasury, demand goes down, the power goes down. And if we have less demand, then we have to debase and inflate that freaking IOU US Treasury even more to sustain our absolute drunk driving debt policies in the last 50 years. We simply have no way out on this one other than currency debasement. And that's just the writing on the wall. But no one wants to talk about that. And for the first time, our true interest expense, which is interest on government expenses, and our entitlement costs are well over 100% of our tax receipts. So where's the money going to come from? It's going to have to be mouse clicked. And I'm sorry, despite all the nuances and wonky debates about whether QE is inflationary, creating money out of thin air to monetize debt is the definition of inflation. No matter how wonky you want to get into whether that's protected or in a loop behind the Eccles building and the Treasury Department and the banks, it is inflationary. And that's why we're seeing inflation. The broad money supply has gone up 5x in 20 years. You can't add that much water to a glass of good Bordeaux wine and keep the flavor. I was a bond jock and a long short equity guy long before I learned about preserving wealth through simple stores of value. So it's not that I'm not looking at these other things, but step outside, look at the hockey puck from 30,000 feet, 10,000 feet, or 5 feet. Look where it's going. Folks, it's going away from your currency. It's going away from your dollar. And if you're in Europe, it's going away from your euro. And gold is simply a better strategic reserve asset to store and save than the former currency du jour or the former IOU du jour from the great Western economies. I do not know, and Glassiev doesn't know, and Babokov doesn't know, and the head of the BRICS New Development Bank doesn't know exactly when or how this will actually become live or operational. I mean, 98% of the GDP in the world comes from countries that either have a central bank digital currency or are creating a central bank digital currency. So CBD, said that we like it or not, is coming. Whether Enbridge becomes operational at the end of the election, before the election, after the election, or even next year or not, I do not know. But the very fact that they're already devoting this much time and energy, and that Saudi Arabia and the UAE are even not only considering it, they want to be on it, that tells you what they're thinking. Look at what they're doing, not what they're saying. Look at where they're going. Look at the fist pump that MBS in Saudi Arabia gave Biden and the handshake he gave Xi. You got to be a little more subtle than just the Financial Times, the New York Times, the Wall Street Journal, or certainly anything that comes from the mainstream media, which I wrote in that article is basically co-opted by corporations that have a message. So it's not conspiracy theory in your mother's basement, tinfoil hat, making up nonsense. Look at what they're doing. When you talk about Enbridge, whether it's operational tomorrow or 3 years from tomorrow, the fact that the UAE and the Saudis are already happy to cooperate with Hong Kong, the BIS, and the People's Bank of China to sell oil outside of the dollar should have us all concerned about the dollar. Because the petrodollar was a brilliant thing in the 70s. It's what kept us, after we got off the gold standard, to keep this natural or unnatural demand for the US dollar. It was no coincidence that we did that. Right after decoupling from gold, we created the petrodollar. Kissinger deserved more than enough credit for that, rightly or wrongly. But that is what beat the Cold War. It's what beat the Russians 18 years later when we had the petrodollar. We crushed the ruble. We crushed Russia financially. All that power is unwinding right now. And again, I'm not saying that to be anti-American or unpatriotic or pro-Putin or pro-China. But it's what I would do if I were in the East after generations of being the dog wagged by the tail of the U.S. petrodollar and the U.S. Treasury and the U.S. exporting inflation all over the world and expecting no consequences when they sanctioned a major country like Russia in 2022 that's very different than Venezuela or Iran in the past, or even Syria in the past. They went too far, as Keynes and Triffin and even Obama warned. And yet the Biden administration, whoever was making decisions for him, made that play. And they were thinking myopically, optimizing, without thinking of the possibility they could be wrong, that this was their Gettysburg moment and they got to retreat. They were so much hubris, so much short-sighted stupidity in that policy, regardless of the moral or immoral views you have on the Ukraine war. That was a financial destructive policy for the West in general, and the US in particular, and the dollar in particular. And that's why I think the milkshake theory, for which I have tremendous respect, it underestimates the lack of trust now in the U.S. Treasury, the lack of demand for the U.S. Treasury, and it misses the point that in 2023, the BIS made gold a tier 1 asset. When Brent Johnson, who I think is smarter than me and knows a lot more about currencies than most people, when he came up with the milkshake theory, that was in 2019. And he knew it was a good theory because he didn't even like it. It meant that even a profligate currency like the dollar was somewhat immortal based on all this synthetic demand outside of it. I'm saying since 2022, that's changed. And that dollar is now, that genie's come out of the bottle. You weaponize that dollar against a major power like Russia, already in bed in some ways with China, and now with the BRICS. And the direction of this hockey puck is clearly going away from the dollar. And the BIS sees it, the Bundesbank sees it, Poland sees it, China sees it, Russia sees it, and 30 other operating members who are, and 59 other members who want to become BRICS. I don't know all the lists, they won't list the list, but everyone wants to be a part of this party. And the West recognized that there are consequences to chest puffing in 2022. There are consequences to how far you can push other countries, regardless of what you think of those countries. Again, I don't think it's a world where you simply replace the dollar. As negative as I am, and you can't get much more cynical about the myopic, short-sighted stupidity of central bankers in general, and the Fed in particular. And again, you could spend psychological profiles, economic profiles on Greenspan, Yellen, Powell, and beyond, and it's fascinating. But regardless of my cynicism about how they've mismanaged and fantasy swapped this idea of MMT into the mainstream, which was once a fringe theory in business schools decades ago and has now become fantasized into, ossified into acceptable. Regardless of that, you can't underestimate the current power of the US dollar, in particular the world reserve currency status for FX transactions, net settlements, SWIFT systems, still the petrodollar to some extent. Of course, 20% of oil was sold outside of the US dollar last year. That should be a headline, again, not discussed. But regardless of all this new hockey puck direction, that's still a very powerful puck, that buck. I'm not saying that the dollar gets replaced entirely or that its importance as a king of liquidity. I save in physical gold, but I spend in US dollars all the time. I hold gold in a vault in Switzerland so that if I want Canadian dollars, Australian dollars, US dollars, or Swiss francs, when I want to buy something, I'll save in gold, which holds its value better than those declining assets. But I need to spend in fiat money, usually the US dollar. So I have nothing against the dollar. The world knows the dollar. China doesn't even want to see the dollar destroyed. And right now, Saudi Arabia and the UAE, their currencies are pegged to the dollar. So this is not an overnight wake up and the dollar's dead and the world's smoking and the earth is on fire and Uncle Sam and the Fed and the president are staring at their hands. Of course not. I'm just saying this is as big a moment as 1971 in the fall. Right. 2022 was. And what we're seeing within 3 years of that de-dollarization is a massive hockey puck move.